One of the other big things you want to focus in on was the capital return program.
Sure.
And so at the time, it was an $130 billion program. It has now since ballooned to $250 billion, which is kind of crazy. Most recently, they announced the board authorized an additional $35 billion in share repurchases, so that total is $175. The remainder, of course, going in the way of dividend payments. You are an Apple shareholder.
I am.
I'm also an Apple shareholder.
Yep.
I love seeing these types of programs. I don't know about yourself.
I do. It's pretty much expected at this point because when you're generating as much cash as Apple is, even with gross margin pressures, even with the ASPs coming down, it's still a very good business to own for and also we'll address this as well, what the perceptions or what the thinking should be for Apple in the future as an investor. But, it's definitely a positive. I would like a little more dividend because right now it's just above the 2% yield. But when you add in the fact that it's trading below 10 times earnings for a company like Apple at this very moment, when I checked 10 minutes before this podcast, it's definitely something to consider. But altogether, they have to increase that capital return program over time. And I believe it extends through 2018. So I'm sure in 6, 9, 12 months from now, we'll see a further extension of it. But sometimes I prefer dividends over buybacks. So
Yeah. But either way, more good of the same for investors, right?
Oh, yeah, absolutely.